for me, the bottom line is I think they got HSBC, as all of the bullion banks are very short derivative paper gold. And it's not just COMEX. It's not just COMEX futures.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And it is time for our weekly silver and gold recap with Dave Kranzler. Now, before we get started, I want everyone to know the dedication that Dave puts into the show, because he was just mentioning that he's got the TV on in the background and it's a commercial for JP Morgan Asset Management. So Dave, I understand if you're a little distracted today because you want to fill out that application, get some of Jamie's help. Certainly understandable. I mean, who wouldn't want a bank that is being charged with the RICO Act? And I might add, folks, if you haven't read JP Madoff, there's another 200 pages of felonies about that bank. Interesting book. Dave.
You know, JP Morgan was also involved in Enron.
And
now, wait, let me just qualify this, because I mentioned the JP Morgan asset ad because I thought it was poetic justice that it was directly followed up by an ad for Gas X. And it just so happens whenever I think about JP Morgan or Jamie Dimon, it gives me gas. So
well, maybe that could
was
be
kind of funny. I'm not applying to JP Morgan asset.
Maybe that could be an upsell they offer, where it's like as you're filling out the application and handing over your assets,
there you
you're
go.
Not coming back. Yeah, we'll give you some Gas X for an extra $29.95.
They're probably getting a fee out of that somehow from Gas X.
Although, Dave, hold it there for a second, brother, because we have a new sponsor for today's show. Today's show is sponsored by Ben Bernanke and the Federal Reserve. All right, I'm somewhat joking. I don't know if I have to say that, leave that. But Dave, I really think that you owe a thank you to Ben, all of the other figurehead leaders of the Fed, because, I mean, we have some stories to dig into today, sir, and what they are doing. I mean, it's giving you a short seller's journal to write each week, a whole bunch of other stuff to comment on and make jokes about, which we'll get to in a second. I guess I'm a little out of order here because, well, I'll start with this one. Stocks fall as Fed Powell says outlook highly uncertain, and suggested further stimulus could be needed to support the economic recovery. What kind of aggressive action does one take when you're already printing unlimited? I was a little confused by that one.
Well, I think
you know how to spell it now, by the way.
I think that he's already made. I think he made it clear yesterday that I think that was in a similar article as that one, where he basically said they're willing to buy an unlimited amount of treasury bonds. So basically QE to infinity, which many of us predicted would happen when they started QE in 2008.
Yeah, and certainly it has happened. And now again, I went to public school. I have an MBA, so we really shouldn't take my opinion for anything here when you have that type of qualifications. But I'm wondering if there's any chance that the Fed saying printing unlimited isn't enough. Is there any possible connection between HSBC losing nearly $200 million in a single day amid gold market turbulence? I'm still digging into this one, but again, we've talked before about the reports I've heard that 2 market makers got blown out on the LBMA March 24th. So certainly in line with that, and I'd love to hear what you think about this one.
You mean in terms of HSBC losing nearly 200 million? I mean, not relative to the QE to infinity.
Well, we'll come back to that one. I mean, there's so many to choose.
Okay,
we'll stay focused here.
I mean, I think this topic's probably been spun around the food processor quite a bit already. I mean, ultimately, there's no way to know exactly what happened there, exactly how they lost 200 million. they're claiming it has to do with the exchange for physicals, I guess, and I don't know. I think for me the bottom line is I think they got HSBC, as all of the bullion banks are very short derivative paper gold, and it's not just COMEX. It's not just COMEX futures, right? It's LBMA forwards. It's OTC structured derivative notes. So there's just really no way to know what the exact cause was of that $200 million bath. I mean, I don't know how you lose money in a bull market. Gold's in a bull market. All you got to do is get long, and you're going to make money. So
Well, that come.
what I think happened is I think they got caught short London bars, the 400 ounce LBMA bars, and someone asked for delivery and demanded delivery, and like not some winky dink hedge fund that they could just say, go pound sand, here, we'll write you a check, go away. I think that 200 million could be what it costs them to go out and actually pay a high enough premium to source the bars to deliver them. Now, again, that's just pure speculation on my part. I honestly have no idea, but I've read through the press release several times, and it's still, it's opaque, and I don't know that we'll ever know the truth. So, but I will say that the loss was somehow connected to them being over their skis on a short position in derivative gold.
Yeah, and that's what, again, it's fascinating how little we ever get officially confirmed these days. But yeah, that makes a lot of sense to me where, someone wants to argue whose position is what, but we know there are banks and hedge funds that are short gold. And when you see the rally like we have, it's not surprising. I mean, it almost, like many of the other things we've talked about over the past year or two, it's inevitable on some hand. Also a little concerning, and I think this would be a great thing for you to break down. I know you've written about it before, but HSBC, I mean, how are we supposed to feel that they're also the custodian for GLD? And been getting a lot of questions. And again, Dave, factor in, there's a lot of people who are new to this. So, for people who have not heard concerns about GLD or SLV and are just piling in that and treating that as gold, could you explain, especially for folks who are hearing for the first time, at least some of the risks they should be aware of there?
You mean with GLD?
Yeah, and SLV as well.
Well, I mean, if you want to buy gold and silver, why are you buying security? Why are you buying paper? Because what the best case is that you're going to index the movement in the price of gold and silver, right? But when you sell GLD, they don't send you bars of gold. You get dollars in your account, devalued dollars. The dollar is being devalued every single day by the Fed. All fiat currency is being devalued every single day by central banks. So I don't know why you would buy GLD or SLV if you want to own gold. You own gold for wealth preservation. You own gold because it's real money. The thing about GLD, and I went through the prospectus with a fine-tooth comb back in 2009, and I wrote a paper. At some point, I'm probably gonna put it up on my blog or something. I gotta take time to edit, re-edit it and look over it. And really, technically, what I need to do is, there's been some changes for the worse to the prospectus and the legal language in the prospectus between 2009 and now, and so I need to reread that, and that takes a lot of time. So I got to find the time to do it, and then revise my paper, and then I'll probably put it out there. But I basically piggybacked a paper written by James Turk in 2004 when the original S1 was filed. And as far back as then, he basically said in so many words that GLD was a fraud. There's no way to verify whether or not they have the gold in there. And again, it gets back to, I think it was 2005, 2006, when Bob Pisani, CNBC made a big production. Oh, we're going to take you inside the vault of GLD, because at that time there was already a lot of noise in cyberspace about GLD being phony, or not all there. I'm not saying it's 100% fraudulent, but and we're going to go inside the GLD vault and show you the gold. And Pisani was directed toward a pallet full of bars, and he picked one up, and the camera zooms in on it and gets the serial number. And someone looked up that serial number and said, that bar is not a GLD bar. So that's the problem with unallocated gold. I mean, a lot of the gold that's in GLD is unallocated, right? So we just saw with Ronan Manley's excellent research, exhaustive research, that the Bank of England, which is one of the sub-custodians. Now, there's a whole problem with the sub-custodian relationship. I mean, even the trustee of GLD can't just show up and knock on the door of a sub-custodian who is supposed, in some cases, these sub-custodians have gold that they safe keep for GLD. And in this case, it's the Bank of England, and it's, GLD is borrowing these bars or leasing them, and they're in the Bank of England vault, in an unallocated vault. So they don't even have they don't even have a piece of paper on them that say these are GLD's bars, right? And now here's the kicker: the trustee of GLD, and I forget who it is, World Gold Council maybe, or State Street, I forget. And they can't at any time just go knock on the door, just go knock on the door of the sub-custodian and say, hey man, we're just doing a routine audit. We need to see the bars. They can't do that. They have to give them, I forget how much notice. And as a matter of fact, if I recall from when I wrote the paper, I don't even know if they have the right to go inspect the bars. Yeah. So you don't even know if the bars are there. The same thing with the actual custodian, HSBC. The trustee or a large holder of GLD, who presumably may think down the road, oh, well, it says in the prospectus I can turn in my shares and get bars. Well, I haven't heard of anyone who's been able to do that besides the authorized or approved participants, which are the bullion banks that supposedly move gold bars in and out of GLD. So a large holder who's thinking, down the road, oh, this would be a great way to source some London bars. He can't go knock on the door of HSBC and say, show me the vault because I've got, $100 million in GLD stock. And I want to make sure the gold's there. They don't have to let him in. In fact, they won't. So, it gets back to people for whatever reason, because it's GLD, it's HSBC, it's official, it's got an SEC stamp of approval on it, that, oh, well, why shouldn't I trust these guys? I'm sure GLD's fine. You're a tinfoil hat conspiracy theorist. Honestly, after I read through that prospectus, I was absolutely flabbergasted. I mean, I could have used that GasX at the time, that the SEC actually approved the S1, because there's so many loopholes in there that make it possible that none of the gold's even there, quite frankly. And like I said, I'm sure a lot of it is there and is in a GLD allocated part of the vault, but there's no way all of it is. And we already know that because they had to lease some bars from the Bank of England just to make the appearance that, oh, we are, because questions were coming up. We're hearing about the shortage of bars in London due to refineries shutting down. And every day there's tons of cash going into GLD, and they're saying, oh well, we had X amount of tons of gold that are in the vault now. Well, no, the tons of gold aren't in the vault. It's gold deposits, and a gold deposit is nothing. Yeah, a gold deposit is air. It's a piece of paper that says we have gold that's owed to us. Essentially, it's more complicated than that, but that's the simplification of it.
Yeah, and also with some of these banks, it's like when you do business with people who have a reputation for trying to screw you, maybe sometimes you see how they're trying to screw you, maybe sometimes they don't. So hopefully the gold and silver is there. But again, from my experience on the trading floor, I'm sure you've
It's
seen
not
this.
all there. Don't even hope.
I
Hope's not a
mean,
valid investment strategy.
but even aside from that, with all the shares that go back and forth, there's like a couple basis points being jacked either way. Keep in mind, HSBC, the custodian for GLD, I remember reading quotes that they were the preferred bank of Mexican cartel money launderers. Again, you don't have to take my opinion for that. You can look it up yourself.
HSBC is not the only one who does that. They just got caught.
Yeah.
Or the regulatory officials decided for whatever reason to go after HSBC.
Yeah, and even though I'm still using the free pass for Bloomberg and I've reached my article limit, you could see there if you Google JP Morgan, Metals Desk, a criminal enterprise. So, these are the guys that are holding those funds. So, again, Dave, if you need any gold bars, you can just swing over here. But a few more before we wrap up today, because
you got a gun to protect all that gold there, Chris?
I got Nibbles. He's on it, bro. So
you need a short barrel 12 gauge.
Well, maybe I'll just get Trump and some of his economic ideas because they're scary, at least. Now, I will factor in, I still have some hope that maybe Trump is just feeding propaganda, but like some of the headlines that
he's not.
I'm holding out hope. Well, maybe I'm delusional.
He's serious.
But I mean, here, hailing negative interest rates. I love the battle they pretend. Well, is the Fed independent or not? Does it really matter? I mean, now you see Jerome Powell. He's already. We talked about last week. You have a 0.6% 10-year Treasury, 2% inflation mandate. We're already negative, and they can sit here. But the end result. And Dave, I guess maybe the takeaway of not everything we've talked about today, but the last couple of months is that when you look at it, it's hard to see how this stops anytime soon. Okay, if HSBC is losing money because people are buying gold, all right, here gold back up at 1750. I mean, geez, silver is up even another 20 cents since we started rambling about all this stuff. 4.5%. What other outcome are some of these bankers and market makers expecting? Because, I mean, I guess you could con people into selling their gold when the Fed, at least over the last decade, pretends they're going to tighten, which never happened. But I mean, they're already in hyperinflation. Now they have to ramp it up. It's hard to see how this goes away. Like, people aren't idiots. And I think I don't know what they think, but people can see the money printing, and it's not an accident they're buying gold.
That's the problem, though. I mean, when you say people can see the money printing, you're talking about a very small little corner of the market, of the financial world that actually understands money printing and the difference between money and fiat currency, and who actually watches this stuff and analyzes it and makes note of it and understands it, right? That's a very small corner of the financial world. 99% of the people out there, if you poll them, they'll be like, yeah, it's probably not good that the Fed's printing money. But if you polled them and said, okay, here's your two choices. The economy is going to collapse. It's going to be painful for about 6 to 12 months. But when this, when the dust settles and everything gets sorted out, we're going to be in a better place, 24 months from now. Or the Fed can print a lot of money and kick the can down the road, and it won't collapse right away. I think most people would probably take option B. So, and that's to the extent they even really pay attention to what's going on with the Fed. I mean, I think most of the time, especially now, I mean, you've got the misdirection of, the virus crisis and, the three-ring circus known as Washington, D.C., Democrats, Republicans, and the White House. So that's they don't talk about, devaluation of fiat currency from Fed money printing on CNN or ABC News or the local nightly news. You know, at the most they might, pay homage to the stock market and cheer about it when it goes up, even though it doesn't help any of them, or most of them it doesn't help. But so that's a big part of the reason why the Fed and the government can get away with what they're doing. There's not the check and balance that's supposed to be involved in a democratic political system.
Well, I get that, and
Because if everybody understood what was going on, Henry Ford said it. He said if people really understood what was going on in the financial system, there'd be riots. That's a paraphrase of what he said, and that was in the 30s. So that's the thing. I mean, that's the problem. I mean, most people don't have time or interest to study up on it and understand what's going on, because if people did understand it and what's going on, you'd get a new president every frickin' 4 years, and you'd get congressmen voted in who would shut down the Federal Reserve.
I get what you're saying. Certainly, I'm not claiming that there's a majority, although at least to bust up the COMEX, I don't think anywhere near a majority is needed. A lot of the folks that I bring on the show that have newsletters and different stuff, I hear a lot of people, and we've talked about the bullion sales, that there are new people coming into this. What rate? I guess we'll find out. Although, Dave, I think perhaps the solution, especially for some of these Wall Street funds that I used to sit around back in the day, would really be getting the Mining Stock Journal powered by Kranzler Research. That darn thing, you're not writing that thing. It's powered by Kranzler Research, which just that in itself adds some extra alpha. You see, Weimar-style money printing will fuel a huge move in the metals and miners. I didn't even get to read it yet. You just sent it out last night. I won't go.
What, you didn't read it? You know how many subscribers
like 10 hours
email
old,
me
man.
at noon and say, "Hey, are you when are you sending out your journal today?" I'm like, come on, man, I got to finish it. It's going to be out right after the market closes.
All right. Well, I'm going to read it right after we're done here. And folks,
no, you're not.
Are new to this, that is not true, sir. Can also get access to that at, where is your darn website? I had it pulled up. It's investmentresearchdynamics.com in the description box below. Yeah. Oh, a little too far. You're overshooting. There you go.
Here, you know what a good use of that is? Why don't you print it out and you take it into the hot tub with some tunes and read it, and then as you're sweating, as you finish a page, you can use it to wipe off the sweat to read the next page.
That sounds incredibly comfortable, Dave. So I will. I'll have Nibbles think that one over, give it to the committee. But yeah, I appreciate you as always, because yeah, I get exactly what you're saying, that most people in the world aren't seeing this. Hey, at least for the ones that are able to see that the Fed is doing something incredibly bizarre that to me is past hyperinflation at this point. Well, for the folks who see that, they can go to get the journals, investmentresearchdynamics.com. And Dave, we'll look forward to checking in next week. Who knows what the gang will do by then, but nice to see silver up, and you go have yourself a good weekend, sir.
Thank you. You too. Maybe we'll get a close over 7 silver. We're 4 cents away.
Well, I think it's happening. Again, all these things you pointed out. I mean, there's every reason to believe it's at least possible that the end of the road is close. I know there's a lot of people been waiting a long time for that, you and I included. Although, again, like you point out in the journal and like you point out on the show and like I talk about as well, if you structure your investments, you can hedge out this time risk. You don't have to need gold or silver to do anything by any date. And gives the opportunity to buy a lot of cheap assets. So thanks as always for breaking it down, Dave, and we will catch up with you next week.
Sounds good.